Okay, I think are we good? We're going to move on to energy transition and then what we see in industries. So with that, Eddie Vonderpart, classic, moderator out of the room. So I'll just say, this is actually an important point. All the panel, go ahead and take your seats. Eddie in Miami met, he met someone. He didn't think he was going to invest in him, but they take natural gas to gasoline. And they're building now a $7 billion plant, but they were doing a Series A. And Eddie's Dutch, but he didn't know another Dutch guy that I knew was the head of gasification for Shell. And he, with that expertise, he made a bet. And I think this is one of your best energy transition bets you've made.
Yeah.
You're up how much?
Don't disclose that. It doesn't matter.
Okay, he's doing well. But the point is, he didn't make that investment decision. It was a series of events. So that's sort of like what you're here today. You might hear from Chris and you're going to think, well, I don't know, or you're going to hear hydrogen, I don't know, but then you're going to see him again in Florida or in Zurich or in Houston or wherever. And that's the thing that's great about our community is you have the ability to sort of vet people together. So with that, Eddie, you're going to have an interesting panel. How you're going to thread this needle, I don't know. Over to you.
This is work, yeah. So this is going to be the interesting one. I promise fireworks. So that's no less. We have half an hour. We cannot possibly cover everything in half an hour, so we'll try. So we have four sort of folks on there with I think a wildly differing view on the world, past and future. So maybe in terms of trying to get it efficient, maybe spend sort of 1-2 minutes introducing yourself, where you're coming from in this space, and what you've been doing, and then we'll go on into a couple of short presentations for Chris and Karsten, and then we'll have some time for some banter.
I'm Chris White. I'm the president of a little international oil and gas company. I've been in the oil and gas business my whole working career.
Hi, I'm Karsten. I'm the CEO of Senko. We're we're a hydrogen platform. We're investing private equity into hydrogen related companies. So we are betting on the hydrogen boom here. More in a minute.
And just for international perspective, Chris operates worldwide, but particularly currently in Latin America. Karsten in Europe mostly. We'll add it up to worldwide. So Karsten mostly in Europe. So my name is Eddie Vonderpart, and I'm amongst others head of a family office and run a early stage venture platform. We do invest in clean tech. And have a couple of investment in clean tech in varying scale internationally.
Thanks, Eddie. Good afternoon. I'm Greg Myers. I'm a partner at Metalmark Capital, which is a private equity firm based here in New York. We were originally Morgan Stanley Capital Partners private equity group, and then spun out about 15 years ago. I spent a lot of my time doing traditional energy investing, oil and gas, upstream, midstream, downstream services. We're an investor in Chris's company, for full disclosure. Maybe that's why we're sitting at opposite ends of the table here. But and we also do a fair amount in other more emerging spaces as well. We've got a couple of biofuels investments and some investments in the ag space. So we see a wide range of things across the sector.
So Chris, can I ask you to do your sort of hopefully 10-12 minute presentation on the world according to Chris?
Yeah. I need a clicker. That's
right there.
Fireworks. All right.
Yeah,
Yeah, I understand, but I want to start there. All right. Mark asked me to put some data up here to get everybody sort of grounded into the issues around the change in energy usage that we're going through now and that we're going to go through. And in order to try to be as non-controversial as possible about this, for the most part, I have limited myself to the Biden administration EIA data. So everything you're going to go see here, you can go look at for the most part. First, I want to quarrel with the terms. A transition implies that you go from one state to another, but that is not what is happening here. And it's not what's going to happen. So
Next slide.
next slide. So I'd really rather call it an evolution or a diversification or something like this. Let's start with exactly what the climate change hypothesis is. The hypothesis is that the global climate is changing, that is caused by human beings, principally by the emission of greenhouse gases from burning fossil fuels, and that something can be done about that. We can stop burning as much or all fossil fuels. And the way to do that is to penalize the fossil guys and subsidize the other guys. That's more or less the deal. You will note that the hypothesis is unprovable. We don't get to go replay history, and we don't get to replay the next 50 years 3 times with different subsidy patterns and different energy usage. All right, it doesn't really matter because there is a consensus that it's true, whether it's provable or not. Okay. What I would ask you to do is retain a little bit of your independent judgment and think about all these things yourself instead of abdicating them to your government. We just had a go at that with COVID-19, and I didn't like it very much. I don't know how you experienced it, or the New York Times, or to the few hundred people in the world who run these models, who are highly incentivized to give you an actionable result, indeed a result that requires action. Next. Okay, right now, we have a rising demand for world energy. We have the pressure to decarbonize, and you have a lot of pressure on the historical carbon-based oil and gas guys to give money back to everybody instead of reinvesting it in the business. And what we're really doing here is squeezing the cheap energy and subsidizing the expensive energy. And if we do not balance this well, there is a real chance to get it badly wrong and screw this up a lot in a way which would be very expensive in this country and which would be a catastrophe in the third world. Next. I want to point out to you that human beings love these kind of stories. The world's going to end because this is more or less an apocalyptic morality play. Human beings have behaved badly and the gods will smite you. Or in a more secular context, you screwed up the planet and the planet will smite you. I think. Next. If you actually look at a lot of the contentions that have been made, and I would urge you to do so, this in particular is NOAA data, so you can get that right off the NOAA website if you like. Of course, there are more hurricanes. Everybody knows it. Bullshit. Of course, they're more severe. Bullshit. Next. I'm not going to run through all this. I don't have the time, but I could do an hour on things that you know to be true that are not true. Next. Just one slide on sea level here. I don't want to. This is a very interesting chart, and you can make a couple of really interesting technical points, but from 30,000 feet, there's one overriding point. We are now, for this last few moments of history here, which coincide with human beings being able to record it, at the lowest levels of sea level, probably almost in the history of the planet. So if you were betting on what's going to happen to sea level from here, I know which way I would bet. Oh, now there's more to this than just melting ice. Okay. There are tectonic elements to this as well, which you may not have ever thought about or may not know about. For instance, when the mid-oceanic ridges are spreading more rapidly, those ridges bulge. And when they bulge, they increase sea level. And the effect is actually to be quite large. So you have to conflate all this stuff to make a forecast of sea level.
Mike,
And
your
there's
mouth.
nobody with a model worth of crap that's doing that now. All they're doing is making temperature forecasts on the ice sheets. Next. Next. Just a note. These are EIA numbers. Car sales by type of fuel. Next. Again, EIA numbers. Petroleum consumption is forecast to be greater by the Biden administration EIA in 2050 in the United States than it is now. Next. More car sales. We're going to sell a lot of electric cars. We are. Okay. But a whole lot of conventional cars are going to be sold too, especially in the third world where they need cheap cars. Next. Okay. Overall world energy consumption by fuel type. Everything is stacked here except the renewables, which I didn't stack in this graph because you wouldn't be able to see the growth rate if I did. Despite the hefty growth rate in renewables, and again, these are EIA data, they're projecting higher use of oil and natural gas liquids and petroleum liquids in 2050 than right now. Next. Next. Okay. So a slide illustrating the dearth of public capital flowing into the oil and gas business. Next. A slide illustrating the difference between investment commitments and exits by public equity firms in the upstream oil and gas space. The blue is commitments, and you see that fall to almost nothing, but there's still some exiting going on here. Next. Okay, a word on divestment by number of institutions or by dollars. These are people that make a pledge, asset managers make a pledge to divest all of their hydrocarbon investments, okay? You know, geez, it's more than $40 trillion of assets under management. That's a big number, right? I'm told that in the world, there's about 250 trillion of assets under management.
2 minutes.
Assets. Is that right?
Chris,
Who knows that number?
we're gonna 2 minutes.
2 minutes. All right. Anyway, recently, with the recovery in prices and with people making some money in the space, you will see that the divestment movement has lost a little steam. Next. Just an illustration of the pressure on the E&P companies to return cash to their investors. Historical returns on renewables versus a couple of hydrocarbon examples. And boys, don't believe all your spreadsheets, right? Next. Next. Okay. Almost 1 billion people in the world have no electricity. 1/3 of the people in the world don't have clean fuels for cooking. 3/4 of the people in the world don't have access to a car. And the population of the world is still growing. This energy evolution or transition stuff is a luxury good. It's not going to sell well in most of the world. Those people want their cars. They want electricity. They don't know why you ought to get it. And they don't. Okay. At the same time,
Got to wrap it up.
we need a major increase in the investment in renewables just to match the numbers I've shown you on the previous slides. And we need a major increase in the investment in traditional oil and gas just to match the numbers that I've shown you on those slides. And if we don't get that, this is going to be unpleasant. And if you want to know what I mean, let's look at Germany right now. Next. All right. There's a Dilbert joke here, but I'll skip it. Next. I think we can stop at this point, Mark. Thank you very much.
Part of 360 is that we want to hear all the views. Otherwise, we're not in an echo chamber. So with that said, back to you, Eddie.
Yes, it is excellent. Thank you so much, Chris. Appreciate it. The candor and the transparency here. I mean, apart from dropping the mic, he could have easily done that. I want to hear now from a completely different side of the spectrum. Karsten, can you enlighten us a little bit about what hydrogen is? I mean, we know from Niels Bohr it's H2, but what does that mean actually?
Yeah, I'm happy to do so. So thank you for having me here. I'm Karsten. As said before, we founded Senko to do impact, and maybe we have some different views on some things, and we're not saying it's all hydrogen tomorrow. There will be oil and gas in between, but in the end, we assume, at least that's our view, it will be more other resources than oil and gas, and maybe based on already existing EU laws, and we're talking mostly Europe, so I'm not claiming I know all about the world here. In the EU, it's already existing law that after 2045, there is no fossil gas, oil, coal, or anything permitted to use. So that's fact. So we can discuss this now, but I'm in business. I'm not a politician, so I'm not discussing it. So there's a clear circumstance that at least if you, and I'm coming back to the US in a minute here, if you want to export today LNG, you might want to export hydrogen or derivatives of hydrogen tomorrow. And you've got excellent circumstances here in the US with wind and sun and plenty of space and whatever Oregon, Colorado, I don't know, Texas, Nevada, and other places. So you could be exporter of the future to Europe. And if you look at the Chevron side, they all go green now, as they want to be in that business tomorrow. And that's actually why they and the oil lobby supported the Inflation Reduction Act. So just not being biased here, but yes, I'm a believer in that kind of impact future. So I have to press here the button myself. So why is hydrogen? And today already huge quantities of hydrogen are used in Europe and throughout the world. So it's not a European thing. The green hydrogen still is very much so. That will change soon. And the IRA will dramatically do so. You want to export green steel to Europe and the world, and you do that with hydrogen, with green hydrogen. So hydrogen is used as a feedstock for the fertilizer industry, for the chemical industry. So huge quantities are used today that it's all so-called gray hydrogen. The gray hydrogen is produced from natural gas, fossil gas, in a steam cracking process. So first step, you don't need new demands, new cars or new anything for that. You just change that feedstock from gray to green hydrogen. Green hydrogen is produced from using solar or wind energy and cracking water. That's the technique behind is called electrolyzer. So the electrolyzer uses water and electricity, and you get water, oxygen and hydrogen. So very easy, proven technology invented over 100 years ago. So it's nothing we have to kind of develop a big thing in. So changing that feedstock is a big thing and an easy thing to do. As for the user, it's the same chemical element. For the user of the hydrogen today, it doesn't make a difference. It's still hydrogen coming in and he's using it with the existing facilities in his chemical plant or whatsoever. The second thing, and that's also again true here for Europe, Europe is today importing about 60% of the total energy volume, mostly from, as you said before, from maybe the wrong place, from Russia and from other countries. So oil and gas imported 60% of the net energy. Unfortunately for Europe, this will not change. The energy source will change. So Europe will not become energy independent, which is good for the US or could be good for the US. We will be energy dependent on others, means we want in future want to import electricity. Bad side here, you can't kind of wire the electricity from the US via cable to Europe or to Germany. So here comes hydrogen into play. Hydrogen is the energy carrier. You transfer that electric energy into hydrogen, and then you ship the hydrogen with a vessel, as you do with LNG today, to Europe and reconvert it into electricity again. So if you drive the European electricity car, whatever electrical vehicle, or you use your heating system at home with electricity, you can do that with US electricity from Nevada or somewhere. You can do that also with electricity from Saudi Arabia or the Middle East in general. So all parts with plenty of space, sun and wind. So that are the places which are the big producers. So that's maybe a summary of why we believe hydrogen has got a huge future. Maybe this one here is how it comes together via the element of hydrogen. Just a nice picture, so to say. We can skip that one. And here, beside of the US, just to make the dimension clear here, the US, you can see that 2022 August IRA, 30 industrial nations have already signed programs to support hydrogen, including India, China, the European countries, etc. So this is an unstoppable trend. And we're not saying 100% hydrogen tomorrow or 2030, but that's the future. So we have to make it on the way, and kind of here comes some numbers on the growth. So that's why I'm excited in this. 650 times the electrolyzer capacity in Europe until 2030. Same figures will be true for the US after the IRA, I'm 100% sure. So 650 times the capacity means growth I've not seen in my life, tremendous growth, and all the capacities, all the infrastructure which needs to be implemented to to make this game happen, is really needs all the spare parts, all the components, all the developers, all the materials needed. So and that's really what we look at. The hydrogen value chain is upstream, so the production. We're looking less so at the production sites. We're looking at the technology to make it happen. So all the manufacturers and technology providers, which are making sure that there is a plant on the ground, that a pipeline is reconverted from natural gas to hydrogen. The caverns are turned over from oil and gas into hydrogen caverns where you can store the energy, so to say, until you need it. So distribution and storage is a big game, not a lot of technology and stuff needed for that. And obviously the end use, that we're a little shy on. As some of the technologies, it's unclear where it goes to. So we are a little shyer on betting on hydrogen cars and stuff. We are pretty sure on shipping. Shipping will be dramatically moving towards hydrogen. Same is true longer time for aviation, and long haul trucks doesn't make any sense with batteries, far too heavy, the battery pack. So that definitely will be hydrogen or derivatives. So we're Thanco. We're a sector-focused private equity firm doing exclusively and only sector investments in the sector of hydrogen and around. So all the derivatives. We have a team of 45 at this point in time, 25 hydrogen engineers, doing with a combined with a consulting approach, looking into projects, which makes sense, what does not make sense, where are the the angles to look at what makes exciting investments. So yeah, maybe that's a short view on what we believe about the energy future. Thank you.
Thanks, Carsten. That's great. And just to be precise, you're focusing in Europe for now?
Yes, we opportunistically we do outside Europe, but really the core knowledge and the core the technology is at this point in time a little ahead in Europe, so that's an advantage. We want to export that throughout the world as we are importing the energy, but we want to export the technology. That's the idea.
Some examples of what types of projects you're gonna entail. You're gonna be in infrastructure. You're gonna be in production. You're gonna be
yeah, I mean, it's more like delivering the technologies into the projects. So we do have a cooperation with Siemens. We look at production plants there, and then we want to have from our portfolio the companies who are providing the materials, like the membranes, the electrolyzers, all the parts, and also like we're interested in developers developing the projects and the services, doing the servicing once it's established. So it's a throughout the value chain, but not so much on the production side, as most of the production will not be in Europe. It will be in Europe a little bit, but we don't have so much room and space for plenty of solar fields. So most of that will not be in Europe.
Okay, thanks. Great. Ines, can you put up my couple slides just to tie this a little bit into size? I want to spend some time on 2 minutes on sort of the clean energy sector. Essentially has been sort of exploding since 2011, 2021 has sort of tripled with a lot in renewables, mostly large solar and wind parks, but more and more in electrification. And obviously the biggest example is the EV. Next slide. And if you add over the productive assets of 750 billion in 2021, if you add sort of all the investments in the venture clean tech space, you're closely to 1 trillion. And the number that Chris mentioned was 2 trillion. So it has to grow within a couple of years to that number. And if you push the next slide, because where's hydrogen here? Well, hydrogen is a little red bar here that between 2025 and 30 will have to be sort of 800 billion. So that's why Carsten gets his 650x from. from a very low base. It will have to become a very significant amount of money. So we are. It is actually sort of almost a call out. Sort of it is an incredible amount of money that has to be invested. We have double to 25 and triple to 25 and then double to 2030. And then Ines is the last one. And that's sort of a lot of people ask me, so why is it the case that the demand for sort of fuel, for gasoline, does not decrease with the amount of SUVs running around, is only increasing? And they might forget that where they are, and the number of Teslas basically lines the nice tree-lined street, but the number of electric vehicles worldwide is actually only slowly increasing, relatively slowly. It's expected to be increasing 18% for the next 5 years, but that's 18% is not that much on a reasonable base. In 2035, it's about 26% of the number, but the number of miles driven are also increasing. And the mix of the ICE cars is sort of relatively unfavorable. So these cars are long haul trucks that drive on regular gasoline. Net, you will find that from reputable sources that Chris uses as well, that the demand for gasoline is actually not decreasing. So we have to do something with that. And so our family office has invested into renewable gasoline. So making gasoline, but not by just basically pulling it out of the ground and having a Brent barrel, which has bad byproducts, but using, for example, renewable natural gas and and forming it to syngas, and from syngas to methanol, and methanol to gasoline, which really is a way to reduce 50 to 70% of the CO2 emissions in the whole value chain. And if you believe this, and there's no reason not to, then that's a massive market waiting to happen. I want to give the mic next to Greg. Can you explain us a little bit about both sides of things? Because you invest both in, let's say, old school ONG companies, as well as in AgTech and other sort of more newfangled things.
Sure. But first, I just want to take maybe a quick poll of the audience, because it's an investment conference and people historically talked about risk return, but now there's the additional third factor here where people are concerned about societal impact and additional factors that go beyond just simple sort of risk return components. But I want to talk a little bit about emissions and what it means in terms of some of the themes, because I'm not sure people fully appreciate some of the opportunities out there that may be available around certain themes. And so just in terms of the US carbon CO2 emissions over the last 15 years, higher, lower, same in the US. How many people think CO2 emissions are higher today than they were 15 years ago in the US? Just raise your hands, show of hands. Okay. Same and lower. Okay. It's about 20% lower today than it was 15 years ago in the US, 20%.
That's what you get for reading the news.
Okay. GDP has increased over that same time period in the United States by 50%. Okay, 50% increase in GDP, 20% reduction in CO2 emissions. And when you take it on a per capita basis, it's actually higher because the population's grown. So it's 25% in the US. While the rest of the world, primarily Asia, carbon emissions have exploded because of coal plants being opened. I think there's differing reports, but China's opening somewhere between, a new coal plant somewhere between every week and every month. There's still another 200 coal plants, on the slate for China, India, and Indonesia. The US has reduced its carbon emissions largely because of coal to gas switching. And so when the EIA looks at the data, they basically say 65% of that reduction of 20% in US emissions has come from taking coal plants out of the US fleet and replacing them with natural gas. So natural gas is a huge, I think, component when we start talking about carbon emission reductions globally, and nobody talks about it. People sort of lump it oil and gas, it's bad, it's bad, it's bad. It's actually hugely impactful because of what's happened here and needs to start happening on the rest of the world. And so the gas opportunity is one that I'm hopeful people start spending more time focusing around, because it's not only lower carbon emissions, I think for an equivalent use of or unit of electricity, it's like 60% lower CO2 emissions gas versus coal. But the United States is one of the few countries in the world that has an abundance of natural gas. Otherwise, you're going to the Middle East, you're going to Russia, you're going to places that, you know, really aren't all that friendly to sort of the global geopolitical environment. And for some reason, people have been really frustrating the development of gas as a resource here and as potentially exporting to the rest of the world. There is a huge opportunity for carbon emissions around the world through coal to gas switching. People are starting to talk about it, but not really doing anything about it. And the opportunity to invest, when you start talking about risk return, what's amazing here when we look at the US, and a lot of the technologies that you guys, I'm sure, are looking at, other things out there, have a lot of risk and uncertainty to it. The gas market doesn't have much risk or uncertainty to it. It is a very liquid market, and it's now, you know, people can appreciate what's happening from a clean transition standpoint, a very impactful market from a carbon standpoint. But it's also really interesting because it's cheap at the moment. The returns are phenomenal and nobody cares. And public companies are trading at 2, 3, 4 times EBITDA. One of the largest gas producers, EQT, it's a $15 billion company. They're going to generate 30% free cash flow this year relative to their equity market cap. They'll return 120% of their market cap in the next 5 years, and nobody cares. And the same thing, I mean, Chris put up the slide on the private markets. That's where I sort of live, is the private markets. And the opportunities are extremely compelling that we see today in the private markets for gas businesses and oil businesses too, for that matter. But gas has undisputed growth. I think if people look at the curves, there's no question globally, domestically, that you're talking about 20, 30 years of increasing demand on the natural gas side. And so the opportunity there for growth, as well as being able to buy really quite cheaply today, existing assets that are based in the United States of America, that have no technology risk, and you get all your money back in a couple, 3 years, nobody cares. And part of that is what Chris was talking about, whereby, you know, you have the shift, the institutional shift from an ESG standpoint. And so I think just Mark's giving me the hook.
No,
But
actually, when I asked you, what do your LPs care about?
and so what I was going to actually just transition there too, is that's where the opportunity is for the people in this room, is that the traditional LPs, I mean, you think about the endowments, right? Every single college campus in America, there's a student protest around divestment. Okay. They don't care if it's gas or oil or anything else. They just want the university and the trustees to stop investing in the hydrocarbon sector, period. And a lot of universities are doing it, right? And so endowments are out, pension funds are out, insurance companies, banks are getting pressure. All the traditional institutions are getting lots of pressure. This is Chris's point around reduction activity. That flows into the private equity world as well as the public equity world. Less and less allocation, which means more opportunity, which unfortunately is going to mean your scenario, Chris, potentially later down the road, high prices for the citizens of the world, which is a bad outcome. We can absorb it domestically, but internationally, it's going to be devastating. And so you just have a lack of investment in the sector. And so the opportunity for family offices, and I'll give a quick story and then hand it back. But we this past summer did a deal where actually there was an institutional investor in one of our companies, large financial firm, that wanted to exit its position. And you know, we queried some of our traditional LPs. This is a natural gas business, so it has the attributes I mentioned earlier. The appetite's zero, right, amongst traditional institutional LPs, largely for additional exposure to the space. And so we approached a number of family offices and wealthy individuals around this. The package of securities that we bought, it was primarily senior preferred with common equity that came along for free. Base case returns were, you get all your money back in 2 years. Okay. I think you looked at it, 2 to 3x reasonable base case return, 50% IRR. Okay. Institutional investors don't care, right? Family offices who get it, who understand, and are looking for return, as well as looking to try to have a social impact to things that they're doing. I personally think natural gas is a great solution because it's a good cash on cash yield and it's
Hydrogen talk for a second.
doing good things for the world.
What kind of returns do you see for your fund? I mean, for the.
For the companies and the base cases, we are operating on typical private equity returns with a huge growth. I personally would expect more, but we're not promising more. So that's yeah, maybe different approach. But let me say one word here about. I mean, you're right. Natural gas is much better than coal or oil. That's a good thing. So it's definitely an advantage compared to those sources, and one should go that way. Completely with you. You should also see the opportunity for countries like regions in Africa, India. It's very easy to install solar panels and produce hydrogen in these areas of the world. So it's not naturally clear that it's so-called the expensive energy for the rich countries. They can become producers of that energy, and it's much more difficult for them to become producer of other types of energy themselves. So there's also a chance in the more expensive energy, you call it, for those countries in the world.
And there's always going to be multiple solutions. Look, I think the long-term path is clear. People are moving towards solar. They're moving towards wind. They're moving towards long-term sustainable renewables. The question is, what do we do in the interim? And Chris brought up Germany. I mean, that's a perfect example of, okay, well, they decided they were going to basically, right, shut down all of their traditional fossil fuel generating assets. And then the Ukrainian invasion happened, and they found that they had to turn back on all their coal plants. Like that's not a good answer. And then they've been stuck with dependence on Russian supply. And so I think long term, right, everybody's moving in the direction that you're talking about, which is how do we get to a sustainable, renewable, sort of generating fleet around the world. But in the interim, you got to do something. You can't just walk away from your legacy assets. And going to coal is the worst possible solution for CO2 emissions in the world. If you're going to install new capacity, you should be installing gas-fired generation over coal. I mean, you can certainly install wind and solar. The U.S. is tricky. I mean, if people have studied the transmission grid, nobody's talking about it here, but you can't just sort of say we're going to put up solar farms and wind farms, and actually the sun doesn't shine and the wind doesn't blow where people live. And then when you try to get it to people, folks may have followed what happened up in the Northeast with Massachusetts and trying to get, they did a deal with Hydro-Quebec to get clean, renewable power to Massachusetts. They can't build the transmission line. They've been working on it for 10 years. They can't get it through New Hampshire or Maine.
And use the hydrogen and use the pipeline, which is already existing, and then pumps the hydrogen through that pipeline.
But the hydrogen solution isn't today
That's-
economically
it's not
viable.
good.
Okay, 95% of hydrogen is produced from fossil fuels.
Can I make a point?
Sure.
I think we need to have leadership from the administration on a bipartisan basis and have a path towards renewable energy. But in the meantime, we need to invest in gas and all these other different sources of energy. It has to be really, really thoughtful. And I don't find that administrations are providing that much thought. In terms of Africa, there are smaller countries where because they've never had the grid, they never had electricity. There are microgrids and renewable energy, especially solar, being put together on a very successful basis by private equity funds and NGOs. So I really think at the end of the day, to solve this climate problem, everybody has to be involved and has to be very thoughtful, and it cannot be political.
That would be awfully nice. Sure, a bit late for that.
I mean, at some point we have to do it.
And finally, to Mary's point, there was I think the largest US LNG terminal just opened, but not an article about it. I had to read it in the local Texan newspaper, which I'm now subscribed to, because they didn't want to have anything to do with any PR around it. So it's become purely political, and that's not good. That's not good for anyone.
I think the leadership
Unfortunately.
to show some leadership and explain to people how things are and how things are going to move forward.
Leadership in this country is trying to aid Venezuela in producing more oil. At the same time, they're trying to stop a bunch of oil production in places like Texas and Oklahoma, whatever.
Right?
It's madness. totally.
Well, it seems to me we are skirting an issue or maybe mixing a couple of things here. To paraphrase what Fiona said, we are all investors. If we only look at investor hat, we should invest only in things that have the highest return for us, period. But we're also humans. So Chris, I totally agree with you. There has been underinvestment in energy sources, period. But you alluded to a problem earlier and you kind of skirted it and didn't come back to it. We still have a climate problem. We still have to tackle it. That is not New York Times. That's science, Chris. That is not New York Times. So that problem has to be solved, but we never touched on it. So investments, gas, you're making a great point. That's the one. We need to invest more, but maybe we need to also invest in carbon capture, carbon sequestration. We still need, as people and as investors, if we want to have our race continue, to be able to have the climate change under control. We know it for a fact. If we don't, we will have problems. It doesn't matter that 3 million years ago, the sea levels were much lower or much higher. The point is that we know the way that they're going right now, we will have problems. We know that as a science. So I think it's relatively, it's really not right to ignore that problem.
It seems clear that sea levels, it seems clear that sea levels are rising. Okay? It's the link between that and CO2 emissions that I would contest. You would claim there is no science to prove it. You are making an assertion that is not provable.
Maybe we could take this. I mean, I know this could be an hour discussion, but in the spirit, in the spirit of moving forward, one of the things that we didn't mention, which is actually very strange, I'll mention it now, is the IRA. How does the IRA, Inflation Reduction Act, complete misnomer, obviously, but provides, what is this, $370 billion for clean and green technologies? How does it, has it changed your investment outlook?
It's still very early, but obviously, look, there are huge incentives in there for wind and solar and hydrogen and shifting more in that direction. So it hasn't impacted us as much directly. Karsten, maybe you're seeing things, but it's not changed things. It's just continued sort of to provide additional subsidies to that sector to speed along the transition. But all the issues I mentioned before are still the same. And if you want to make the biggest impact on carbon reductions globally, the quickest, the fastest way to do that really is coal to gas switching. And people haven't embraced it. They haven't talked about it. I don't know. Maybe it's because it's political, to your point, and people just hear gas and they think hydrocarbons are bad. And so the industry, candidly, has not done a great job at sort of getting that message out. But if they did, I mean, that is the fastest way, unequivocally. And by the way, all the other, when you start talking about also CO2 reductions, let's remember where it comes from, right? Like people are talking about electrification of sort of the world. So you electrify your automobile. Okay, well, that's got to come from somewhere, right? And so great that the Chinese are plugging in their electric vehicles, but it's burning coal to create that electricity. Is that better or worse than burning gasoline, right? So and there are large industries, candidly, right? 30%, I think, of the U.S. economy or the U.S. Energy consumption is associated with traditional industries, glass and steel and cement and bricks and rubber and all this stuff, fertilizer, right? Ammonia. You make all of that from traditional hydrocarbon-based energy. And so it's not all that easy to transition. I mean, people are doing it, but when you talk about electrification, which is sort of the area that I think gets the most attention, and people are trying to build wind farms and solar plants, and but you want the biggest impact, coal to gas by far, because then that sort of feeds its way all through the rest of the economy in terms of everything else that's trying to be electrified.
That's the reason that the emissions are by the amounts that Greg started for, has been that substitution.
All right,
That's-
Oscar, just a quick question. And first of all, kudos for the panel, amazing discussions. Carson, you were mentioning about the green hydrogen, right? And where I come from, right, in Brazil, we're seeing a lot of deals, people bringing to us for us to invest into green hydrogen with this whole discussion that it could be a place to do the production and then send it to Europe. How far away are we talking from that kind of a reality? Because I'm always investing thinking this should become a reality 5 years, 7 years once I'm investing into that specific company. How far away is it true that 2030? What's your view on that for countries that are EM type of countries that already have, like in the case of Brazil, 80% is of the energy is produced using water to do the hydrogen, green hydrogen exportation type?
And by the way, did you know that he's raised over 430 million in the Brazilian market in the last 18 months?
Congrats.
But sorry,
I'll pay you later.
but it's a fact.
See, the technology is ready, so you can start building plants now. So it's not a question of, so is it in 10 years time or is it if it's today? So
You can implement the technology today. I know from some Brazilian projects in bigger scale. So Brazil is definitely a place. Some people look at Chile also, as there is strong winds going, like, and sun. I'm not so familiar with the wind situation in Brazil. Ideal is if you've got wind and sun, then you've got more kind of power on your plant. But I've heard about some bigger projects in Brazil, and it's definitely an opportunity, as the investment costs are not like, you're not building an atomic power plant. You're building a solar farm, which is kind of super low tech, and the electrolyzer is similar, easy. So and then the export is typically via a normal ship, ammonia ship. So you're shipping the ammonia to Texas if you sell it to the US.
See Europe buying from those regions
Absolutely.
10 years from now?
Yes. So the big quantities. So we're talking about sizable numbers. Is maybe in 5 years. All the governments are traveling around the globe these days. The German chancellor is traveling to Egypt, to Qatar, to South America, to kind of find places where production can be. And then they're gonna bring the technology, and then here we are.
So here we are. We have an energy transition breakout soon. There's also a climate tech breakout at the very end. So two of our next panelists can't make it, so I gave it a little extra time. But I'd like Anna and Andreas to come and talk about their industries. It's a little different than this, but this is.
Come join our 361 firm community of investors and thought leaders. We have a lot of events created by the community as we collaborate on investments and philanthropic interests. Join us.